And right now, folks, we're going to jump over to our man, Teddy Kekstadt. And, folks, if you haven't checked out Teddy's outstanding Tiger Forex Report, he puts out new issues every Monday morning, updates throughout the week when warranted. You get a subscriber webinar included in there as well. It's all for $97, and it comes with a 30-day money-back guarantee, folks. Check that out on the front page under the newsletter tab. And don't forget under the services tab, folks, a couple of great webinars. Capitalizing on time with calendar stock option spreads and Japanese candlestick pattern stock and option strategies. Check them out. Teddy Kekstadt, good morning.
Good morning, Tom.
So where do we kick things off, man? We got a Fed meeting, a week from today? But we got a little bit of yields, a little bit of dollar at 97.50. What are you watching most importantly in this market right now, Teddy?
You know, it's kind of a ho-hum thing right now. You know, I mean, the major pairs right now are kind of resuming their longer-term trend over the past couple of days. But I think actually, if anything, it's just setting us up for a sideways market going into the next meeting, which is going to be a non-event again. So it's going to be a complete non-event. So especially with all the stuff going on now with Powell and what have you, like I'm going to bank on.
I'm just talking about the September meeting you're talking about right now, even not the one or this meeting.
Yeah.
Sorry.
Yeah. I think it's going to be. It's going to be a complete non-event going into it. Like there's no real reason. We have no fundamentals or technicals that are going to drive the interest rate market right now. So they're going to be buffering on their highs. You know, right now I think it's just a little bit of a profit-taking pullback for a range trade. But I'm sticking with my theory that there will not be a rate cut until Powell is gone. So, and if that's the case, you know, we're just going to be snaking along. You're going to see the dollar continue to, you know, have some dips. But the euro and the pound especially, they're pretty much reaching their extremes. Like they're trying to resume the major trend against the dollar, but they're struggling because the reality is their currencies are very, very weak. You know, so I think you're going to start to see some divergence going into the end of the summer, where you'll probably see the U.S. dollar Swiss continue to tick lower. But I think you're going to see the pound and the euro versus the dollar. They're going to have a lot of struggling with trying to break through resistance and really try and maintain a bull trend versus the dollar.
That's quite a chart of the Swiss franc. I haven't looked at that one in a little while. We're pushing 79. We're as low as 78. I remember when we were first talking to you, Teddy, that was parity. Remember? We're at 92.
Right.
And so you're looking for potentially that to even further push that, maybe. One of my best buddies lives in Switzerland, so I'm always keeping track of the franc as we talk, especially as well.
Right.
But that even could continue that trend even lower, and that's in terms of dollar franc trading at like 79 right now.
Absolutely. I think that there's one trend that exists in the FX pairs versus the dollar. The U.S. dollar Swiss is the major trend that is not changing. Long term, medium term, short term, it's a bear. You know, any rally in the U.S. dollar Swiss is a rally to sell. And what would really give the only significant thing that I could see would cause a major, say, even trend reversal for the U.S. dollar Swiss would be if we started to raise rates excessively.
Okay.
I mean, excessively. And I don't even see how that's even remotely possible. I just can't. I mean, I don't even. I mean, I don't know where that would come from. There's no other fundamental.
We don't want to find out what's going on. If somehow right, as in right. I agree. Right. We're not even close to that. Thankfully.
Right.
What about? Can we jump to dollar yen? Because Japan's in focus, of course. Today especially, we got some action, man. But we got a lot of traders watching gold, the yen. What do you think about the yen? A little volatility with Japan deal, of course. But we get. What do you think about dollar yen right now?
You know what? With the dollar yen, I think that it's probably going to be gravitating towards our monthly pivot level that we've had in place for a long time, which is around the 145 area. The high that we set in place a week ago, that was because of a lot of U.S. dollar strength that had come out over the past, that 2 weeks going into it. Oil is soft right now. Yields aren't exactly pulling back. So there's no real reason to see the U.S. dollar yen like really fall apart, So I think that the crude, I think it's going to be staying a range trade because you have this, as long as crude continues to stay on support and possibly even breaking out to the downside, that would be something that we could see, US dollar yen get to that 145 level, maybe even get down to 144. So as far as taking out the highs, I don't see what would really do that. I think you'd have to have a major rally in the US dollar to really push that trend. As far as the US dollar yen, I think you can look at the low that was set. Let's see, this would be back towards the end of April. Yeah, it would be April 25th. So that low was, around 140 something. And then the high that was set back on March, what was it? Friday, March 28th. That high of like 151, which 150 is our critical BOJ level. Remember that the BOJ wants to keep the U.S. dollar yen below 150. Anything above 150 starts to really upset their fundamental economic goals, if you will. So as far as trade and everything else. So I think we'll stay below that 150. 150 to 145 is probably your major body, trading range. You may spike back down towards that 140. Like I said, I would key off of those swing high and swing low points from the earlier part of the year. We've been contained inside that range since then. So that's with whether we've had trade talks, tariff talks, whatever, as far as even BOJ meetings and Fed meetings. And we know right now, as far as the central banks are not going to make this currency move right now on either side. So you throw that one out the window, unless crude has an excessive rally or an excessive break. I don't see you're not going to get a commodity fundamental out of this market. So it is what it is. I wish I could say the market's going to trend. This is a tough period. Currencies typically trend 70% of the time and only go sideways 30% of the time. Okay, well, let's look at where we're at. We're talking about for 6 months. We're looking at already of the year. We're in July. And if you really look at the currencies since January, February, for almost 6 months, we've been in a sideways market. Okay, so that's 50% of the year. Now, depending on what timeline you want to use, if we're in that 1/3 still of non-trending, well, just think about the longer we go with this range trade, the bigger our trends are going to be once they start to kick off. You know what I mean? You have to have patience with all markets, but with the currencies, they always deliver when it comes to trends. So, and as far as volatility, we're definitely going to see it. But where's the interest? Stock markets are on their highs. Rates are still relatively low. Nobody's got a reason to do anything except for traders.
Yeah. My dad would say building cause. Maybe that's the case, right? Building cause for the next move, then the next move higher or lower. Hey, we'll see. Teddy, great information, man. I appreciate it as always. Folks, check out that Tiger Forex report right now. Teddy, have a great week, man. We'll talk to you next Thursday.
You too. Take care.
Thanks.